This episode will originally air October 30th, the day before Halloween. And like Halloween, we offer both tricks and treats. It can be a little spooky. It can also be rewarding. That's sort of how people are feeling about gold and silver prices these days. You've seen the charts, but are you happy or sad to see gold prices explode higher or drop sharply? Are you scared by the huge price increases? Looking at spot gold over the last 5 years, it ran straight up to almost $4,400 an ounce. That's a huge gain. I mean, it was around $1,800 an ounce just a year and a half ago. We've been talking about the importance of gold prices since this show first debuted more than 7 years ago. In the beginning, people were doubters. Most thought of gold as a barbaric relic. That's what John Maynard Keynes said 100 years ago. He felt that gold was useless as an investment and worse as the basis for money. And less than a decade later, the government confiscated everyone's gold. And in 1971, Nixon abandoned the last vestiges of the gold standard for money. Only recently, the whole world has begun to recognize the importance of gold. Even the International Monetary Fund. They've admitted the gold is a barbarous relic no more, as shown in this headline on their own website. Barbarous relic? Really? Gold is an amazing metal. And it may be all well and good, but does a change in the price of gold have any impact on your life? The answer? Yes, it absolutely does, even if you don't know it yet. And we get questions all the time about gold. So I've invited my colleague, Mike Carter, to bring your questions into the Economic War Room. We hope to supply you with answers. Mike's a partner in the Economic War Room, a co-host of Pirate Money Radio, a project lead for both our transactional gold movement and the NSIC Institute for Financial Advisors. Welcome, Mike.
Thank you, Kevin. Great to be here. It's been an exciting week. We just got off our legislative summit. We're seeing all kinds of activity in the news out there, and consumers watching the show, or our audience members, are asking lots of questions on gold. But excited to do this segment today, just to get a little bit of thought leadership from the expert here.
Yeah, well, we had 15 legislators from 15 different states represented here at Liberty Hawk, and they had a bunch of questions. You were unveiling to them, pulling the veil back from their eyes so that they could see how a state can make gold and silver money again under Article 1, Section 10 of the Constitution. But in doing so, there were lots of questions that came out. Now, why should we do gold? So bring me those questions and let's see if we can do our best to answer.
Well, first of all, I want to say thank you for giving me a little more testosterone on my steps. I didn't know I was a barbarian as I walked in and talked to these legislators about gold, but
Barbarious?
We're going to wake them up a little bit with the truth of what's going on. And I think the biggest question that's going on right now, we're seeing a little volatility in the gold, but what's driving the prices of gold? They've gone up dramatically, you said in the opening, but what's really driving that?
All right, so there are a lot of answers, and gold prices have not solely gone up. I mean, you know, as we're recording this, they're down $200 an ounce or something. So they're bouncing around. But breaking the $4,000 barrier, that was an important thing. Let's answer it. What is the number one reason? The number one reason that we shared is the national debt. It's our first undeniable truth when we cover the undeniable truths. You've got the chart here. Do you see it? Gold prices and U.S. debt. This only goes to 2023 when the debt was only $31.4 trillion. In the past couple of years, it's gone from $31.4 trillion to $36.7 trillion, and gold prices have gone up additionally from $2,000 an ounce. They've gone even further to almost $4,000.
You know, that chart shocked me because, you know, I'm talking to legislators today. We talk about debt. We've rounded it to $40 trillion. I've gotten used to that number. It wasn't that long ago when it was 31. I had to double check. Was it really only 31 just a few years ago? And to see that kind of spike increase, and we know that there's a direct relationship between the debt and the prices of gold.
Yeah, well, $40 trillion is what we're approaching in $4,000 gold. So, you know, it seems like it's highly correlated. And this chart, this is from visualcapitalist.com. As you can see, they've gone hand in hand. The more debt we've accumulated. And by the way, the starting point for both of those was 1971. when we left the gold standard. All right, so that's the first answer. Here's the second answer for why I think gold prices are going up is the world is turning to gold and turning away from the dollar, and that's being led, that's one of our other undeniable truths, that other nations are targeting our currency. Here's a headline from Barron's, October of this year, so this is just last week. China, Russia, Brazil want to demote the dollar, and gold is the answer. So other nations are getting rid of the dollar. They don't have a good alternative, so they're putting gold in.
Yeah, we're seeing that. We're even hearing Jamie Dimon talking about gold prices going up. We're seeing people talk about adjusting portfolios. Gold seems to be the topic of, it's not crypto, it's almost like gold is the topic people are talking about now.
It has been recently. All right, the third reason is inflation from our massive dollar creation. Here's a headline I've got that says 80% of all dollars in existence were printed in the last 22 months, and that was from January 2020 to October 2021. You remember we did the episode, Things Have Changed. With Biden, he's got a new approach. Inflation was on the menu when the Biden presidency came in. And so from that time and through October 21 with COVID and everything else, we printed 80% of all U.S. dollars in existence. When you create that much money, it's going to create inflation.
That's a scary number. That explains why we've seen home prices skyrocket and more than double in many markets out there now.
And food prices. Yeah. And everything else that we consume, clothing, you name it, everything went up all of a sudden, and it's because we printed all this money. You can't print gold. Gold is created when two neutron stars collide. It's seen as a hedge against inflation, and so people who fear inflation have been buying gold, and that's the third reason. The fourth reason, central bank digital currencies and gold. Central banks are turning to gold, but people are afraid that that gold will be taken away from them and they'll be forced into central bank digital currencies. So the fear of central bank digital currencies is causing people to buy gold.
Central bank digital currencies, the social credit scores and everything else out there.
Exactly. Here's a quote. It's interesting, therefore, to examine the impacts of this newest form of money on one of the oldest, gold. Central bank digital currency being the new one. Gold functioned as money for centuries, a role which it lost only 50 years ago with the end of the Bretton Woods system. Nevertheless, gold has continued to thrive as a distinct asset class, a form of money that is outside the control of policymakers. That's the appeal. With CBDCs on the horizon, discussions about privacy, monetary policy, and programmability will inevitably emerge. Some may turn to gold to allay these concerns. Increasing cross-border usage of CBDCs may lead to greater currency volatility, prompting some central banks to potentially build up greater gold reserves. Those are the main reasons. And of course, money's been changing. It's been changed for a long time, and everybody loves a winner, and gold has been a winner recently. So that explains why gold prices are going up. I know we have to take a break, but I know you've got more questions. We'll be right back with Mike's questions and your questions after this break. In uncertain times, finding stability in the economy can feel challenging. But what if you could navigate economic volatility while honoring your biblical values? At Timothy Plan, they believe this balance is possible. Timothy Plan filters its volatility-weighted ETFs and family of mutual funds through a biblical pro-life and pro-family lens, so you can see competitive returns and moral responsibility, helping you to weather the economic storms. With Timothy Plan, align your investments with your values while adapting to our ever-changing culture. Since 1994, Timothy Plan has been recognized leader in biblically responsible investing. Timothy Plan, your bridge between faith, finances, and the future. Visit timothyplan.com or call 1-800-TIM-PLAN or 1-800-846-7526. Investing includes risk, including possible loss of principal. Before investing, carefully consider a fund's investment objectives, risks, charges, and expenses contained in the prospectus available at timothyplan.com.
Gold holds its value far better than the US dollar. Let's see what happens when I go in this sweet shop and pay with gold. Can I pay with gold?
I mean, you can wait, find out how much it costs.
Do you know what? Basically, do you know why I'm even using gold?
I do not.
It holds its value over time,
Yeah.
but it's a bit difficult to spend, isn't it? Do you take this?
Yes.
That's MasterCard. Yeah, but I'm actually going to pay with gold, believe it or not, using this. That's my MasterCard, and it's linked to my gold wallet. So let's just watch that. Authorizing. Yeah, add a tip.
Thank you.
So this is your store?
Yes, sir.
And how much gold did I pay?
0.2243 grams.
Yeah, success. Bought with gold, paid with glint.
Before the break, I was taking questions from Mike Carter, representing your questions, your thoughts. What's on your mind, particularly about gold? And we just had a big legislative summit here with legislators from 15 states asking similar questions. So, Mike, we've got the question. What's the next question?
Next question. Here's one that came up that's kind of interesting. I hear it all the time. What about Fort Knox? Do we really have the gold there? I heard that, initially when Trump came in, they're going to go in and check and verify it's there. Then it kind of went quiet on us. So what's the real story?
Yeah, it was President Trump and Elon Musk. Doge was going to go down there and check out to see if the gold is actually there. Now, I think it probably is. I really do. But the only way to find out is to do a full audit or inspection of the gold. We're not doing that. I don't know why. Would it be a waste of time? Do we know it's there? Is there more there than we thought? Less there? Who knows? But I know the Fort Knox Bullion Depository, look, it started in 1937, and the gold arrived by U.S. mail, which is interesting. Since then, the U.S. Bullion Depository at Fort Knox has stored precious metal bullion reserves for the government. It currently holds 147 million plus change of fine troy ounces of gold. And unlike West Point and most other mint locations, it's not a production facility. And it says on their website, not surprisingly, no visitors are permitted at the Bullion Depository.
Well, that's transparency.
Dr. Goldfinger wants to come in, and James Bond is going to keep him out. But in the total of all mint-held reserves, we have 248 million troy ounces in the total of mint reserves, and they have a book value of about $10.4 billion. Book value because we hold those reserves on the books at $42.22 an ounce. That would be, about $11 billion.
That was the price of gold in the 60s or something like that.
Yes, but the gold price now is 100 times that level. Mark to market, it would be closer to $1.1 trillion for the total U.S. held asset.
At the current gold price today.
Yes, at the current gold price.
But we hear people talking about, well, maybe this is a solution to our national debt. We'll repatriate the gold at a higher price, or we'll set the gold. We saw that happen back when they took the gold away from us back in the 30s.
Yeah, let's do it. I think we should. It's worth $1.1 trillion. It's the largest portion of central bank reserves around the world, and our portion is $1.1 trillion. And if we sold it all and paid down the debt with it, it would cover about 6 months of our spending.
Yeah, that's a little depressing. Well, how about if we price the gold higher? Let's say we take the gold up to $10,000 like the rumors
Well, gold
are.
may be going higher on its own, as we'll see, as we talk through this more. But all our gold, keep this in mind, the U.S. budget deficit in the first 6 months of this fiscal year was $1.3 trillion, the second highest 6-month level on record, and $1.1 trillion of gold would buy us about 6 months of time. That's why people are turning away from U.S. Treasury bonds and turning to gold as their central bank #1 asset. And you can see that gold is now the largest portion of central bank reserves. It's ahead of Treasury bonds. And this is, again, a visual capitalist chart, but it's fairly recent. You see that gold is now 24% of all central bank holdings, and U.S. Treasuries have fallen to as little as 23% as of the reserves of central banks around the world.
That's a bit concerning. When I hear about that, I typically see a direct correlation between the debt and the price of gold, but I hear Treasuries not selling like they have been. Is that something that we should be worried about?
Well, yeah, we ought to be worried because the gold price reflects market fears. It's like a canary in the coal mine. We should be worried because gold is an inflation indicator. We should be worried because the loss of confidence in the dollar could mean loss of reserve currency status, which would be a hyperinflation risk. And we should be worried because every time gold starts to do extremely well and our economy looks weak, well, once it's happened, 1933, they confiscated everybody's gold. So let's start with the first one.
Is that a canary on the floor, a dead canary down there?
Dead canary on the floor.
It seems like this is reality.
It is potential reality. And The good news is that there are some positive things going on in our economy too. We don't have to take this as the sole indicator. But here in Dawn e-paper, which is October 21st of this year, spike in gold price is a warning signal. We're living through a moment of profound uncertainty, a time when global tensions, financial instability, and rapid technological advances mirror the unsettling patterns seen before the First World War in 1914. Hey, that's when we instituted the Federal Reserve, same time frame. While history never repeats itself, it is often rhymes, and today the rhythm feels familiar. In 1952, former United States President Herbert Hoover released the Memoirs of Herbert Hoover, The Great Depression, 1929 to 41, offering a rare ground-level view of World War I, not from a general, but from a leader managing its humanitarian economic chaos. They were looking at gold price spikes then, and they said, this is portending something bad, and it was. Maybe it is like inflation. Here's from September 26 from a blog, DiscoveryAlert.com. Gold prices respond to U.S. inflation report 2025 analysis. People are worried inflation may be coming back. That's a second worry. Here's another worry. Ripples presaging a financial tsunami. And this is CEPR.org, CEPR.org. Loss of confidence in the U.S. dollar's reserve currency status could trigger a collapse of the U.S. Treasury market and international financial fragmentation. This column argues that hedging is a rational response to recent fluctuations in the U.S. dollar as investors look to insure against exchange rate risks. And how are they doing? Buying gold. And here's the last one, investing.com. Doug Casey writes, the next gold confiscation, what it could look like and how to avoid it. So yeah, these are real fears that people are having about the spike in gold prices. Are you getting similar feelings when you're talking around the country?
I think so. People are like, is it too late to buy now? Are we going to fix our debt? Are these things going to happen out there? But it's hard when you see gold go up as dramatically as it has. But yet you look at all the other factors.
And then the sharp price drops like we have occasionally.
Yeah. But even that, there have been price drops. Certainly haven't been seeing the inflation going down. We're still feeling the pain of all that. So everybody's trying to figure out what the answer is, and they're aware of the confiscation. They're aware of things that happened out there. It clearly builds the case for the work we're doing with transactional gold and silver legislatively. But people are like, what's next? How do I do this? What should I be thinking about? And should I start to get a hedge here? When I hear mainstream, even banks and investors talking about you should maybe own some gold, people are like, how do I do it? How do I buy it?
Not long ago, you were told hold 10% of your portfolio in gold. Now it's up to 15 to 20%, and we'll talk about that after the next break. Here's the reality. Things are not solving on the global stage. Things are still in tumult, which means people will continue to turn to gold. Absolutely, there will be price spikes and there will be price declines. But over the long run, gold is held up as an asset. I'm not making a financial advice push for you. Check with your financial advisor, but you need to learn more about gold. We'll cover this and more after the break.
I'm Kevin Sorbo. When you spend money, you consider who you're buying from and the causes they support. If you don't, then you're likely supporting companies that are trying to destroy our country and take away our freedoms. Patriot Mobile is America's only Christian conservative wireless provider. They're a cell phone company and a good one. They offer nationwide coverage on the best 4G and 5G networks along with 100% US-based customer support. But here's the deal. Patriot Mobile's mission has nothing to do with cell phones. They carry out their mission by giving back millions of dollars every year to Christian conservative causes that are actively engaged in the fight to save America. Voting is no longer enough to beat the woke. We have to band together, support like-minded companies, and vote with our dollars. That's how we win. Stop supporting companies that want to destroy America and join Patriot Mobile today by visiting patriotmobile.com or call 972-PATRIOT.
I'm outside Babe's, which I'm told is the quintessential chicken restaurant here in Roanoke, Texas. Let's go and see if we can buy the food in here, chicken with gold.
It's gonna be the fried chicken.
This is unbelievable. How am I going to fit all this in? I seriously actually don't know how to begin with this. This is so overwhelming. Do you think I can pay with gold?
I don't know. You may have to ask the cashier. I don't handle it.
Can I pay with gold? But actually, you said I could pay with this? Okay, I'm going to pay with this, but I'm going to pay with gold. So look at the price of gold going up. That's pretty cool, yeah? Right, this is babes, yeah? How much gold did I pay? Gold, how many grams?
0.26.
0.26, quarter of a gram of gold. How about that?
That's pretty cool.
That's pretty cool, yeah. Success! Bought with gold, paid with glint.
Kevin, people have been asking about gold, and you know it's no surprise that with all the stuff in the news out there, they're asking, should I own gold? And what would be the best way to go about doing that?
You know, that's a big question. Should you own gold? Most advisors are saying 15 to 20% in portfolios right now, which is a dramatic increase from just a few years ago. So I think most people should own gold, and they can own it in various forms. That's the bigger question. How do I own gold?
And you've always said, though, gold is not an investment. Is that changing? Are those dynamics changing things a bit, or?
No, I don't think gold is an investment. I think gold is money, and we're working to make it money again. But it's a perfect hedge in so many areas, in so many ways, whether it's economic turmoil or inflation or whatever. It has some volatility, but here's the traditional way that people own gold. They buy an ounce of gold like this. And you can go to Costco and get something like this. This one came from the Scottsdale Mint, and it's certified and so forth. It's got a DNA lock and everything else, and it's even got the Archangel Michael on top of it. But there are a lot of different ways. Do you want to buy gold as pure bullion? Do you want to buy gold? This is a 4 escudo Spanish coin. This is pirate money treasure right here. This is 1787. I got it because it is the year the Constitution was written and adopted. You know gold that way. Here's a double escudo, also known as a gold doubloon, and this one's in great shape, 1787, also from Colombia. And that's one that is highly prized for its collectible value. But here is U.S. gold coin. This is from 1924, so it's about 100 years ago. It's a gold eagle right here. It's a $20 gold piece. You know, you have a choice here. Would people rather have a $20 bill from that era or a $20 gold coin? This will spend like $20, and this will get you $4,000 about worth of stuff.
This is dated 1787. So
Right.
this had enough value over time that somebody said, I'm going to hold on to this. It didn't get burned up. Those things didn't happen out there.
Yeah, no, gold is immutable. So how do you own gold? Gold is money. It's constitutional money. We talk about it's a good unit of account, it's a good means of exchange, and a good store of value. Well, it's actually a good unit of account. You can measure everything in ounces of gold. It's a great store of value. It's holds its value over time. But in terms of means of exchange, that's the one we've been working on. How do we make gold and silver good money again? And we know you can do Glint, and Glint's a sponsor of this program, and you can spend gold with a Glint card. You can learn more at glintpay.com/gold247, and they're a sponsor of the show. But we ultimately want to have you have a debit card from your state where you can spend gold as a means of exchange. We passed legislation in how many states?
We passed it in 5 states now.
No, how many
All right,
states?
we're going to go all the, well, we passed it in 6. We got a governor in Utah that's still trying to understand it, but I think he's moving that direction.
He
So 6
vetoed it
states.
once, yeah. All right, so
but,
if you...
but I'm looking at this. This is a 1924 gold piece. It was worth $20 in 1924. Right. And today it's worth over $4,000.
Yeah, this is worth $20 in 1924. In today, you can spend it like $20 today,
which
but
is
it's lost
worth
90%
less.
Yeah, over 90% of its purchasing power, 98% probably over the last 100 years.
So that kind of gets back to buying gold is a store of value. I should have some gold.
Absolutely. 15 to 20% is what most advisors, people need to ask their advisor what's right for their situation.
And in general, that used to be 10%, maybe at the most.
Yeah, well, a lot of people would say no gold, it's a barbarous relic, but progressive advisors would say 10%, and now they're saying as much as 20%. And if you're going to own it, you can buy coins like this one, which that's a rare and numismatic coin. You can buy modern coins that have gold, which are newly minted, maybe not issued by a government. You can buy bars like this one from Costco. There's a 1-ounce bar. You can buy gold backs. This is another option. People talk about gold backs. You may have heard of that. This is a polymer-based.
Yeah.
They're a little expensive for the price of gold, amount of gold that you get in it, but they're being issued in various states. It's not official state legal tender, but that's another way people are buying gold. You can buy gold in an exchange traded fund. GLD or OUNZ are two examples. You can buy gold in your IRA. That's another way that people are buying gold. You can buy gold mining stocks, which I've done, and there's an ETF of gold mining stocks, and it's done very well. It's a way to get exposure to gold without actually owning gold, and you can put it in your portfolio. You can buy gold funds, and there are mutual funds just dedicated to gold. You can buy jewelry, like my gold ring here. You can buy gold on the futures market, and you can even buy poor man's gold, also known as silver. And this is a 1783 Spanish mill dollar, also known as a piece of 8.
I guess I should say arg on that, the pieces of 8 here. Well, when you talk about, the poor man's dollar or poor man's gold, things are changing though, right? Because a working person might not be able to go out and buy this bar for $4,000. But I could buy gold on this, or I could buy an ETF. I could I'll buy $1,000, and but I can't necessarily spend it. But now all of a sudden, with electronic technology, I have the ability to say, hey, I want to buy $100 of gold a month and start saving, right?
It is an old idea made new. All right, here's an example. The first Continental notes issued by the Continental Congress, this was from 1776. This is a Continental note. It says, this bill entitles the bearer to receive 4 Spanish mill dollars, pieces of 8, or the value thereof in gold or silver according to resolution of Congress. So the idea was that you could put your gold on deposit, and then you could go exchange this and get your gold back at some point.
But your gold was actually on deposit.
No, unfortunately, in this case, it was not. But here's a case where it was. This is the Bank of Kentucky, where they issued in 1837 a note. It's a 12.5-cent note that was exchangeable for 1/8 of that silver dollar there. So they cut it into 8 pieces.
I actually had this sitting in a vault.
A piece of 8, yes, okay. And that worked. This is the modern form of it. Where's our glint card? This is the modern form of it, where you can literally have gold on deposit held for you and spend it like money using a MasterCard. And Mike, what you're doing, where's this other one? You're making it possible for the state of Texas or Louisiana or Arkansas or Florida or Missouri, to where you can have gold on deposit and spend it like money. Yeah, that is the future.
And we had 15 other states here this last week, all looking to say, how do we make this happen in our state?
Absolutely. All right, so you're probably asking, should I own gold? Ask your financial advisor. But right now they're talking about not 60-40 stock bond portfolios, but maybe 60-20-20, 60% stocks, 20% bonds, and 20% gold. We'll put all of this in our free economic battle plan. We can't predict the price of gold, but we have opportunity here. Learn more at economicwarroom.com. This is Kevin Freeman and Mike Carter from the Economic War Room.